Hi, I'm Phil Monkhouse, Realtor in Houston. Today I'm going to go over the standard paperwork that'd be used if you're making an offer on a resale home in Texas. Yeah, this works as if you're a buyer or a seller, but I just wrote this up as if I was working as a buyer's agent. So yeah, let me start with the standard 1-4 contract, and then we'll go through some of the addendums or addenda as well. Um, it's just an offer until it's signed by both parties and communicated back to the party that signed first. So until then, it's just an offer. It's not a contract until everyone's signed and it's executed. So yeah, here are a couple made up seller and buyer names, the legal description as well as the address as you normally see. That's a made up address as well. Exclusions, that'd be anything that's attached to the property, like a light fixture or something you want to take with you. I prefer not to leave blank, so I just write not applicable instead of leaving it blank. The offer, so it's a $500,000 offer with a $450,000 loan, so $5,000 cash down payment. And then it references it's going to be shown on a third party financing addendum. No leases to worry about. In this one, title company, I made up a title company called Sienna Title. Um, Earnest money, pretty, I'm not going to say standard, but typical. Typical means that's usually how we see it. There's no standard, but typically 1% of the purchase price of $5,000. And then $300 as the option fee. And the option fee, they're getting 10 days. And what that means is in those 10 days, usually it's for inspections, but the buyer can walk away for any reason during those 10 days. That $300 is credited to the sales price if it closes. If it doesn't close, the seller keeps it. And typically, the earnest money would go back to the buyer if the deal falls through, as long as they didn't breach the contract. Um, okay, so title policy, again, typically seller's an expense in resale, issued by the made up title company I made, Sienna Title. Now this one, people get confused about this one. This is for the title policy, shortages in the area at the expense of the buyer. So the title policy itself is pretty expensive. It's for I think, oh shoot, I think in the calculator I punched in 400,000, but I write 500,000 in this example. But hold on, let me pause. I'll find the answer. So yeah, I did an example when I was doing the math earlier on a $400,000 home. Then I wrote the offer as 500,000. So here's a $500,000 home example. So the owner's title policy, $2,940, and then that extra checkbox that I clicked, it's 5% of the policy, so $147. So that's pretty, like, the title policy is very expensive, but that extra insurance, that's if there's something wrong with the survey. If the survey has errors on it, you pay for this extra coverage. So that's a good one to have, especially in an older home. The fence has been moved, a pool's been added, anything like that. I always suggest that for buyers because it's good, cheap insurance. So yeah, so moving on from that, survey, even if it's in the listing, the attachments that your agent can get, this box is typically checked. So if I see that checked on an offer as a listing agent, I'll just send the survey and the special form that goes with it back to the buying agent. Oh, I didn't put days in here, but this would usually be something like 5 days, something like that. Objections. This is one that's filled out incorrectly often. Some people write residential use or single family dwelling. That's unnecessary. But if there is something on the title policy that needs to be addressed, you put 3 days, 5 days, something like that. Usually it doesn't happen, but if there's like a lien on the house or something like that, that's when you need to object to it. So this one, I'm just pretending it's in Sienna, so it is in a property owners association or a homeowners association. Required notices. So this one's changed in the last year or so. Now I made up, there's no such thing as Sienna Mud 1. There are muds in Sienna, but I just made up Sienna Mud 1, and this does exist, Sienna Parks and Levee Improvement District. So these are going to be part of the contract. Your realtor can find these forms online. and then get them signed with the contract. The seller's disclosure, hopefully you received it ahead of time. If you didn't, there's other check boxes here. This is another kind of misunderstood example. Buyer accepts the property as is. All that means is before they get a home inspector out, you accept it as is. You're not asking for repairs like damaged flooring or something like that before inspection. So, but if there was something, there's like a hole in the wall, or you can see that shingles are missing or floor damage, something like that, and you wanted it repaired, this is where you would put it. You'd fill this box in instead. Residential service contract or a home warranty. I'm not really sure how these ever got into contracts in Texas, but they're pretty common that buyers ask for them. You can usually sneak it in there as a buyer without too much pushback from the seller. So depending on your coverage, 500 is a little low depending on what you get, especially if there's a pool or something, or you want your appliances covered. But yeah, $500 will get you started. You could spend easily $700-800 on one of these or more, but the seller's going to be paying this portion of it. And then if there is a balance, you'd have to pay that at closing. If you have a personal relationship, again, I'm just saying it's a normal example where I don't, so I'm just saying not applicable. Closing, I just wrote November 10th. Today is, when I'm recording this, is September 28th. So closing, 30 days used to be rushed. That's not really rushed. Usually you can get it done in 3 weeks, even with a loan, not too big of a deal. Sometimes it does take longer, but you kind of know ahead of time. So 30 to 45 days, I think, would be pretty standard. Usually 30 is more standard than 45 would be a little long, but that can be anything, but that's usually what you're going to see. Possession upon closing and funding, rather than having a temporary lease back, which could be a buyer lease back or a seller lease back, but I'm just going to keep it simple and not do that. Here's a new thing that was added to the contracts. It references smart devices. The seller's got to make sure they delete all access to those upon move out. Yeah, just so they don't have access to cameras and stuff after the buyer moves in. So special provisions, usually this is blank. They always warn us not to be practicing law as a realtor. This one I usually do put in if I'm working for a buyer in Sienna. In Sienna, you have to get a certificate of compliance. The seller has to pay $140 to do it during the closing process. But if there's conditional items like refinish your front door, add a couple bushes where a few died, trim back trees that are getting too close to the roof, stuff like that. I always put, like, usually they don't even have to fix them. They can just like pass that on to the buyer, but I like to put this in here to help protect the buyer. Items on the HOA certificate of compliance are to be completed by the seller at the seller's expense prior to closing. Just a little bit of just to save it from being on the buyer's. Shouldn't really be the buyer's responsibility, but that's usually what happens. Settlement and other expenses. So this section here is if the seller is contributing to the buyer's closing costs, which happens a fair amount. So it's a good thing to ask for if you're working with a buyer. It's a pretty big negative, I find, for the seller, because that means the property, like this one, for example, is $500,000 purchase price. If the appraisal comes in at $495,000, and this was, let's just say this offer was agreed to, becomes a contract, the seller would still be responsible for paying this $5,000. So the contract has to appraise for the full amount, and this amount isn't considered. So it's kind of a hit for the seller. So for that reason, I'm not a big fan of it for the seller, unless you're fairly confident the property will appraise. Appraisals, I'll touch on them later. It's probably the worst part of the buying process for me. Either that or inspections, one of the two. Let's see, what else do we have in this section? Notices, just want to make sure there's a way to contact the clients if anything goes wrong, plus my own contact info. Not if anything goes wrong, just notices to go along with the contract that the title company is going to send out. Here's where the different addenda are noted. In this example, we have an HOA addendum, third-party financing addendum, and an appraisal addendum. The other one that could be part of this would be a non-realty addendum. I left it off in this example, but like if a fridge was included or something like that, that's where that would go. Oh, in Texas, it's kind of different from other states. I hear this from clients, but like a built-in microwave and the stove range, that would all be included, but the fridge and washer dryer are not generally expected to go. Usually, like often they are thrown in, but they're not expected as part of the house. And then this is the executed date. So when this becomes a contract, the last person that signs should definitely fill in this date. This is the date where all the like the option period where you have 10 days, that's based off of, and later I'm going to show you the buyer financing approval. Everything's based off to this date, so it's very important that that gets filled in at the contract signing. I think that's all I need to show you on here. This is just realtor stuff, just all my information, and then the listing agent would be over here. And this gets filled out, the option fee receipt, and the earnest money receipt, that will be filled out by the title company, who will send that off to the agents, the realtors, when it's received. Oh, I should note too, the option fee and the earnest money, there's 3 days, 3 days to send the money in. If it falls on the weekend or a holiday, it's the next business day after. But otherwise, it's 3 days, and that's has to be honored, or you'll be in breach of contract if you didn't send the earnest money in. And the option fee, if you didn't send the option fee in, then you don't have an option period, and you're obligated to finish the contract, and you can't really negotiate repairs. All right, I'll move on to the addendum. Hopefully that made sense, but I'll move on to the addenda next. All right, so first one I'm going to cover the addendum for property subject to mandatory membership in a property owners association. So in Sienna, we have two now. They work together as one, but we have Sienna Residential Association, which is the original 7 villages, and the second one is Sienna Community Association, which is Sawmill Lake, and everything that came after Sawmill Lake, which is Sienna Oaks. And there's a third village, I forget the name of it, hasn't started yet, but it's Summer Hill or Summer House or something like that. So there'll be 3 villages down there as far as I know. But anyway, this is in the older part of Sienna, I'm assuming. I'm making up Sienna Residential Association. So the way this is filled out, this is if I was a listing agent, this is how I'd put it in the MLS. In the attachments, this is like suggesting to the buyers, this is how we want you to fill it out. So buyer does not require the delivery of subdivision information. Just another thing to do, another cost that may or may not be needed by the title company or the lender. And then if it is needed, that information, then I'm saying the buyer pays for it. The seller could pay for it. I'm saying the buyer. I forget the exact cost of that. I think it's like $250 or something like that for this information. You can easily find it on siennanet.com. They have everything kind of laid out there, costs and everything. Okay, fees for deposits and reserves. So $250. I wrote this specifically like this. This is usually how I'm doing it these days, but $250 for the transfer fee. That's typically seen as a buyer's expense. The seller in Sienna is going to get charged a foundation fee. It's 0.5% of the home's purchase price. And now this is a newer one. This is called a cap fee. This is it's the amount of the HOA fee you'd pay per year. But if you're buying a house in Sienna, you would also pay this fee. For the newer part, this always existed, this cap fee, they're calling it, capitalization fee. For the older part, for every home that was sold after January 8th, 2019, you pay this fee as well. If you owned your home before that and you're reselling it, then that fee does not apply. You've been grandfathered. So again, hopefully that makes sense. I can go over it with you if we actually do a transaction, but yeah, let me move on to the next addendum. Okay, third-party financing addendum. I'm doing this as if they're doing a conventional loan, and they would have a loan pre-approval to go with this offer. But anyway, I'm not going to jump into that right now, but that's critical. Your offer won't even be considered without it. So in the contract, we had the same thing, $450,000 loan. It's a 30-year loan. Loans typically here, some other countries are different where this is a term, but here, typically your loan is the same throughout the whole 30 years. You're going to have the same interest rate until you refinance, which you probably hopefully can with the interest rate not to exceed. I put 9% there. Right now, rates just climbed to a 23-year high. 7.83 I heard was the average right now, highest in 23 years. But I put it at 9% as a listing agent. I don't want to see that number match what's on the pre-approval letter because it's an out if the rates go up during the closing process. So I like to see that like 1% higher than what they're actually going to get, so they don't have an easy out. Yeah, I just don't feel comfortable if that's right at the same number as the loan pre-approval letter. So, and then approval of financing. The buyer has 21 days for the lender to check everything out, make sure everything's okay with their loan. If it happened after 21 days where they said, oh, your credit's not good, which should be done well ahead of time, then they'd be in default and they'd be breaching the contract and the seller could keep the earnest money, most likely. 21 days is a little long. I don't know why we can't shrink this number down to 14 days, 10 days. I think you can with a good lender because, that's a long time to see if the loan is good or not. I'm not sure if it can't be just, I like to see this number as small as possible when I'm working with the listing for sure. It seems very doable to get that number down, make sure everything's good to go, just so you can shrink that number. And that's it for this example. Let me go to the next one. Okay, appraisal addendum. 3 examples here. This one, when things were really hot in 2022, especially, pretty much was able to demand this from offers in multiple offer situations, saying if you want the house, please include a waiver. So they're giving a full waiver here. If they're buying the house for $500,000, the appraisal comes in at $475,000. They're going to bring extra $25,000 cash. The seller doesn't even have to negotiate the fact that the appraisal came in low. So we were able to get away with that at one point. Not the case anymore, unless it's a special situation, a house that's really in demand. But that's more of a multiple offer type thing where you can demand that. Partial waiver, it could be used, not as often used, I guess, but I'm buying the house for $500,000. But in here, I'm going to write $485,000. If it comes in if it comes in at $490, I have to cover the $10,000 difference. If it comes in at $480, then I have an out because this number is $485,000 right here. I can renegotiate. Yeah, that's an out for the buyer. If it comes in lower than $485,000, comes in at $480, they can renegotiate. And then this is just being very clear, saying the buyer, they have 21 days to get an appraisal done, and it has to actually get to $500,000. If it doesn't, the buyer can terminate. Now, hopefully they can work out a deal. A lot of the times, or I would say most of the time, the seller takes the brunt of this, if not all of it, if it comes in low. But it can be split down the middle, or the buyer can pay. But they just do have an out in the contract that way. So yeah, that's it for the appraisal addendum. All right, so here's an amendment. This is where we make any changes to the contract after it's been executed. Um, oh, here I've got a checkbox on this one, but there's lots of different uses for it, but a common one would be after inspections during the option period and some things were found. The cleanest way would be either, let's just say there's $5,000 worth of repairs agreed upon, would be a sales price reduction here, or this would be the seller's contribution to closing costs. This would be another section where that could be credited to the buyer. So one of those two. This is like a painful part of the contract. The seller gets pretty emotional in this period when the inspector starts picking their house apart. Some of the inspections I do find are like overly harshly worded, definitely, which can scare buyers for sure. And sometimes it's valid, sometimes it isn't. Yeah, just a painful part of the process. I do try to tell sellers to work it out as much as possible and give a little more than they feel they should at this point, because if we go back to the market, we're in a weakened position. Now the house has been on the market a little while. Once buyers hear that it was on the market and it fell through, then they start thinking, oh, what's wrong with it, kind of thing. And then they do get an inspection report, which may be kind of harshly worded. So always best to work it out rather than stick on principles on this one wherever possible, but not always possible, of course. And then the buyers too, hopefully they are reasonable in their repair requests, which people usually are, but yeah, this is a tough one to work out sometimes. A lot of deals fall apart during the inspection process. Anyway, and then I just want to touch on the appraisals too. So when we get the appraisal done, that's another painful part. Those are the two worst. I think the appraisal is the worst because we have no control whatsoever as realtors. There's the buyer's lender sends out the appraiser. He comes in and he's going to look at comparable properties like we do when we try to give an opinion on the price of a home. But it's kind of sometimes they do offer us to, if their appraisal comes in lower than what the purchase price is, they do offer the listing agent a chance to find some comparable properties, but it's tough to make them listen. So when the value comes in low, we went through some examples on the appraisal addendum, but when the value comes in low, typically the seller is going to have to usually stomach most of the difference, going to have to eat that difference. Not always. It can be split or the buyer can pay, but that's usually how it works. So yeah, inspections, appraisals, two painful points in the process. Inspections could be reduced with some, I really try ahead of time, tell buyers and sellers to, try to work it out and be reasonable and don't get too stuck on principles on this kind of thing. It's just better to keep it going. Relatively small amounts of money compared to the deal. You probably don't want to lose it over that. Like you're going to regret it later. And then appraisals, yeah, we just do our best because that one's a little bit out of our control. So yeah, hopefully that helped. Any questions? I know I went over that fast and maybe didn't explain things as good as I could have, but yeah, if I can help it out further, please reach out. Thanks a lot. Bye.